Welcome to Tech Blueprint, a window that lets you know the latest technology news in the world. As we all know, due to changes in the external environment, chip foundries like TSMC and Samsung have lost their ability to freely ship to the outside world. Faced with the rapid replacement of the Chinese market, many overseas equipment manufacturers have begun to realize the crisis. For example, the Netherlands has begun to waver regarding shipments of DUV lithography equipment and has removed related equipment from its sensitive list. As Chinese chip companies rapidly break through, the US is also becoming increasingly restless. Nvidia's investment in Intel is contributing to the long-term leadership of the US chip industry, and a situation TSMC did not want to see emerge. It is understood that after TSMC established its US factory, its capital expenditure on the US factory has continued to increase, from $45 billion to $145 billion, in order to further capture market share. While Samsung has not continued to increase its investment in its US factory, it has begun to iterate its advanced chip foundry technology through increased government subsidies in South Korea. Companies from all over the world are eager to gain a share of the chip foundry market. Faced with TSMC's dominant position in the US market, Nvidia promptly extended a helping hand to Intel. On September 19, Nvidia, Nasdaq, NVDA, announced it would invest $5 billion in Intel through an equity stake. At the same time, Nvidia and Intel also announced a joint development of AI infrastructure and computing center products to accelerate applications and workloads in the hyperscale, enterprise, and consumer markets. This implies that the two companies' collaboration in the chip industry will become even closer, going beyond Nvidia's traditional partnership with TSMC. Shortly after the announcement of Nvidia's additional investment in Intel, new news emerged from Intel, creating a situation TSMC was reluctant to see. According to foreign media reports, Intel has placed a new financial advisory order with ASML of the Netherlands, increasing its purchase of high numerical aperture extreme ultraviolet, high-NA EUV, equipment from 1 to 2. This move indicates that Intel is accelerating its expansion into the chip foundry sector, bolstering its own process capabilities by purchasing more advanced equipment. High-NA EUV lithography machines are essentially upgraded versions of ASML's EUV lithography machines. As chip manufacturing precision continues to increase, previous equipment can no longer meet manufacturers' precision requirements. High-NA EUV lithography machines have emerged, specifically for the foundry production of advanced chips below 2 nanometers. However, due to cost constraints, TSMC has not ordered a large number of high-NA EUV lithography machines from ASML. ASML's largest customer is the American chip company Intel. The $370 million price tag for a single machine is enough to deter many chip foundry customers. Intel's increased investment in high-NA EUV equipment is inseparable from Nvidia's recent investment. The two American chip companies have many overlapping areas in their chip businesses. For example, Intel has been developing high-end AI chips, aiming to replace Nvidia's core position in the AI chip market. Nvidia's investment could potentially lead to a significant reversal of events, as Nvidia, as a shareholder, already has the power to determine Intel's future direction. A collaboration between the two parties in the chip sector, particularly in chip foundry, would pose the greatest threat to TSMC's related business development. To be honest, the US has always viewed TSMC as a wafer foundry that can be leveraged. As for whether TSMC will help the US build its supply chain, the US has no concerns at all. After all, with a significant amount of capital expenditures flowing into the US market, even if TSMC doesn't produce chips there in the future, the US semiconductor industry's objectives have already been achieved. Intel's accelerated expansion into advanced chip foundry will directly weaken TSMC's bargaining power in the US market. There are already reports that TSMC's 2nm process will cost 50% more than its previous 3nm process. Such high wafer foundry prices will pose significant pressure on US manufacturers whose market share is shrinking. It can be said that Nvidia's acquisition of Intel shares is a preemptive move to establish a future chip foundry channel. If TSMC, due to rising capital expenditures and declining chip foundry market share, wants to raise prices, Nvidia can readily offer Intel as an alternative. Thus, the situation TSMC is unwilling to see has already arrived. Building a factory in the US not only failed to achieve a larger market share, but also put TSMC in a disadvantageous position in the chip foundry business. The strategic partnership between Nvidia and Intel is bound to trigger a series of chain reactions. At that point, TSMC will hardly have the final say in the US chip foundry market. Coupled with the loss of independent shipping rights, US factories will put TSMC in a triple dilemma: difficulty recovering investment costs, regaining pricing power, and maintaining autonomy in the chip foundry business. Even when global manufacturers develop a Americanized chip supply chain, TSMC will likely still be subject to US regulations, unable to freely ship to Chinese companies. The current situation is precisely the inevitable result of a series of decisions made by TSMC's top management. This company, which has benefited from the globalization of the chip supply chain, may eventually fall from grace in the era of deglobalization. What are your thoughts on this? Feel free to leave a comment and discuss.